This is huge news. The market is starting to shift, but what does that mean to you as a home buyer or maybe even a home owner if you're thinking of selling your house? In this video, I'm going to cover some of the market shifts and some things that you should be aware of and how we can best attack this market and be successful and we can get some wins together. If this is the first time you're checking out my channel, my name is Seanu Uyehara. I'm a branch manager with Loan Depot based in Las Vegas, and I'm helping you get your mortgage right. Whether you're a first-time home buyer or a seasoned investor, I want to help you understand and how to navigate the mortgage world as best as possible. If you ever need a second opinion, this is why I do these videos. You can always send me an email, and my team and I are willing to do a free, no-cost analysis to help you make sure you're getting the best strategy with your home loan. Now, the market is starting to shift, and we've seen the media just come out with their doom and gloom over the last several months, basically saying that the sky is falling and the real estate market is starting to crash. But there's a couple of articles that I've come across lately, and I think it's really interesting, and I wanted to share them with you so that way you guys are well prepared whether you're a buyer or you're a seller in this market. Now, the first article you can see here is talking about Blackstone, one of the largest hedge funds, pulling out of 38 out of the 80 markets that they're currently in where they're buying rental property. And not too long ago, there was an article that talked about that Blackstone was ramping up and raising another fund to put more money together to buy specifically single family homes. But there's two ways to look at this article. One, you might look at it and say they're pulling out of 38 out of 80 markets, call it half of their total business. They're going to exit those markets because they don't think the market is strong enough right now to continue to buy. Half of you will look at it and say the market's going to crash. I'm going to follow. I'm not going to buy. However, the other half of you will say, well, they are continuing to buy in 40 other markets across the country, which means they do see opportunity there. So this is why you have to read between the lines when it comes to reading these news articles that are out there. Blackstone and these other big funds like Tricon Residential and some of these other places like Invitation Homes that I've mentioned to you folks, these guys are buying. They're not taking their foot off the gas. I don't care what this article says. 38 out of 80 is not a big deal. That means they're still in 40 of our backyards across the country buying up single family homes, which makes it harder for you and I to go and buy properties, whether we're buying a one-off single family home as an investment or you're a first-time home buyer thinking that you're going to get a deal. Now, there's a staggering stat in this article that I'm going to read to you. Research this summer by MetLife Investment Management estimated that institutions owned some 700,000 single-family rentals across the United States in 2022, about 5% of the 14 million single-family rentals nationally. MetLife forecasts that by 2030, in literally 7 or so short years, institutions will increase their holdings to 7.6 million homes, more than 40% of all single-family rentals. Now, if that doesn't alarm you, and if that doesn't get your attention, that these institutions are going to own nearly 40%, and I'm sure that number is going to grow, call it 2 out of 5 single-family homes out there are going to be owned by these rich institutions, you and I are getting squeezed out of the game. This is why it's so important that if you can try to own a home today, you need to do so. This isn't me trying to convince you to buy a house in this market. This is because in the long run, in 7 short years, you may not even ever have a chance to own a home. So as this market shifts and we start to see sellers be more willing to negotiate with you, willing to come down on their price, willing to pay your closing costs, willing to do almost anything and everything to get you into your house, why would you not take advantage of that? I'm literally having these conversations every single day with potential buyers. They are still on the fence because interest rates are too high. I get interest rates are high because you're comparing that to 2021 when interest rates were 2 and 3%. But you can go to Freddie Mac's website. You can do this research yourself. You can see that interest rates were never that low. They were only that low because the government forced them to be that low. That was a mistake that they made, which caused a frenzy in the housing market. They are regretting that now. But 7%, 6%, that's kind of been the average over the last 50 years. Now, you still might say, Sean, that interest rate's too high. I don't want to pay it. That's totally fine. But remember, as you rent, you're paying your landlord's mortgage. And for most of you, you're not taking the necessary steps to become a homeowner because you're not working on your credit, you're not saving up more money, and you're not paying off all your bad debt. These are some of the biggest mistakes that I see personally every single day with so many of our clients. And I'm trying to get them into a position, whether it's 3 months, 6 months, or a year from now, to be able to become a homeowner. Again, this is to benefit you, because the bigger game that's being played is they're trying to squeeze us out of owning real estate. How would you like to be able to rent for the rest of your life, pass absolutely nothing down to your kids? And what's it going to be for them to own a home? It's going to be impossible. Where I grew up in Honolulu, Hawaii, home prices are about $1.5 million. And I don't know about you, but I don't care how much money I make. I don't feel like paying $6,000, $7,000, $8,000 a month just for a mortgage payment. I think that's a little ridiculous. However, that's where things are moving, and you have to understand that. So right now, even though the media is saying, don't buy, there's going to be a crash, things are going to get worse, you know what? That may happen. Who knows? You never know these days. You can never take anything off the board. However, if you're moving into the home and it's going to be a long-term investment, you can ride the storm out. As long as you're comfortable with the payment, stop focusing on the interest rate. Focus on the strategy with your loan officer. Focus on the strategy with your real estate agent, because a good realtor is going to negotiate like heck for you. And a good loan officer is going to find the right program that's going to work for you. I literally had a client the other day that was buying $1 million house, and the seller actually gave them a $55,000 credit to buy the house. How cool is that? We're buying their interest rate down, we're covering all their closing costs, and they're putting themselves into an amazing position to refinance once rates drop, and they're going to be very happy with the purchase that they had. I had another investor client out of Hawaii purchase her second rental property here in town. They made an offer on a house. The seller not only dropped the price $30,000, but they also agreed to leave all the other appliances and the furniture in the home. Everything was still in great condition, so my investor doesn't have to worry about furnishing the property. All it needs is just a quick cleaning, and this thing is going to be rent ready. They also covered all their closing costs as well. These are just some of the winning scenarios that I'm seeing as a one-man loan officer that's seeing my clients take advantage of the market. And another trend that we're starting to see, according to the National Association of Realtors, is that home cancellations are increasing. Redfin had also noted that home cancellations were up 15% year over year. Now, again, you have to take that with a grain of salt. Last year, there weren't many people canceling contracts. Why? Because you had a 2.5% interest rate and you were willing to buy the house simply because you had a low rate. Obviously, rates have increased. Many of you are having second thoughts about buying a house, so you're starting to cancel. But again, let's read between the lines here. Now, if you're a buyer on the sidelines, what does that tell you about the opportunity? What I see and I hear with that statistic is that these sellers are going to get even more desperate. Because if you are a seller and let's say you're 3 weeks into your transaction and the buyer decides to pull out of the deal, you're going to be pissed. Because why? You were a week away from closing on your home, and now guess what? Your house is going to go back on the market, and we're going to head into the holidays, and less buyers are going to be out there looking for homes, which means your home's going to sit probably until maybe the new year. So do you think if you're a buyer and you're serious about moving, do you think the cards are in your favor, or do you think the seller still has the upper hand like they did the last couple of years? What I hear is that we, as a buyer, we hold all the cards. If that seller just lost a buyer on his house, I would imagine they'd be pretty damn desperate to go back into contract on a house. So imagine if you find that home to fit your criteria and you want to make an offer. Do you think they're going to come down on price if you negotiate the price down? Do you think they're going to pay your closing costs if you ask them to? I would almost bet that they would, because they want to get that thing sold. So this is why, as a buyer, you have to understand the mechanics of the market and know that with a good realtor and a good loan officer by your side, we can come up with an amazing strategy that's going to work for you, that's going to benefit you in the long run. So take advantage of this opportunity. But if you're a home seller, make sure that you are doing your due diligence on the offers that you're taking. Did they actually get pre-approved? Or is it just a pre-qual letter and the loan officer didn't even verify anything? Or maybe you need to grill the buyer's agent a little more. Are they writing offers on multiple properties and just seeing what gets accepted? Are they truly wanting to move forward with this house, or are they just writing an offer to see what the seller's willing to do? I think as a listing agent, you have to press the buyer a little more to make sure that they're really in the game. You can also do that by having a loan officer cross-qualify and make sure that the buyer actually meets all the criteria. This is a strategy that we implemented back in the day when there was a ton of foreclosures. When you worked for a big bank and they were selling homes, you actually had to pre-approve with their lender if you wanted to make an offer on the house. There was no exceptions to this rule. That way the bank knew that you could actually qualify and you could actually close on the house. This might be a great strategy to prevent buyers backing out of the house and to prevent the looky-loo buyer from writing an offer and then canceling at the last minute. You have to think of other strategies to think outside of the box to protect not only the seller, but as a buyer to protect yourself as well. So those are a couple of strategies that I think you should be aware of. Those are some things that are happening in the market today. There is still opportunity out there. Don't let the media tell you otherwise. And remember, you get what you look for. You want to find doom and gloom, you'll totally get that. But if you look for opportunity, that's what we're here for. I have a great team of realtors behind me that can find you the right home in any market across the country. So share this video with a friend if you're looking to invest in real estate and make some moves while everyone else is going to sit on the sidelines. Thanks for watching, and I'll see you on the next one.